Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, March 30th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the daily time frame of the ES. GDP and initial jobless claims both coming out here prior to the RTH Open. A bit of strength heading into those numbers, and since those numbers came out here, pushing up to the highs of the day and holding at the moment. One thing to keep an eye on here is how does price respond to the previous week's high price. We are just now beyond the previous week's high here, which is the Fed day high. And if prices cannot stay above that level here, we may begin to rotate back down. So every time we've come into this zone of the chart here, ever since the transition day back in mid to late February here, it's been selling pressure away from this level. So to come back into this zone, keep an eye again on the previous week's high price, a failure there, which is basically 40.72, 40.73. You start to fail there, you open up a potential rotation back toward the Fed level down below, which is 40.3375, and perhaps back toward the previous week's close. So keep an eye on that level there. If bulls can keep prices through that zone, then we may begin to see a transition into the next highest market structure, which basically takes you from where we are up to 4,200. So this is going to be a key level to watch here to see how do we finish the day. Do we finish the day back below the previous week's high, back below today's midpoint with a rejection, or do we power through? So keep an eye on that previous week's high. If we take a look here at the NQ, similar price action, although price has not quite gotten to the previous week's high just yet, still approaching it here. Previous week's high is 13,082s, and right now today's high is 13,069s, so about 13 points off that previous high there, and that's going to be the level to watch again. We've had a very solid move down here from 650 all the way up to the top of the range. As we've mentioned before, we have been stuck inside this range here, which is now a 10-day trading range. And to come up to the upper end here could mean that we are going to likely fall back into the range ahead. So again, keeping an eye on the previous week's high, keeping an eye on the previous session's high. If there's any failure at those points, we may begin to see a little bit of toppiness that leads to a rotation back within the range. So keeping an eye on those edges here for the NQ. Crude oil right now is up about 0.8% at the moment, but in a very narrow multi-day range. You can see right here these 3 days, super narrow. Obviously today just getting underway, but if we bring this down to a 3-day range here, you'll see how compressed this is. 35% of average, barely registering here in terms of the histogram. And again, when you're talking about this type of compression that is developed in an up move, we could be looking at the next failed new low as a jumping off point for a continuation higher. So any pullback here or a failed new low could offer an opportunity to buy the dip and look for a continuation back up within the range towards 77s, and then again a finish of the move into 80.5. So as we mentioned before, this thing has pushed back above the 70 level and then past that 72 level, which was this pivot here in the bottom of the prior range. So to get through those points and hold here, very bullish. You're seeing a rising 8 period. Again, any failed new low that comes out of here could be a great continuation for a move into 77 and 80.5. Taking a look here at gold futures. Gold up about 0.1%. Also in a narrow range. This thing's able to hold above 1960 for right now. You see this bullish Pima trigger zone has continued to provide strength as well. We are in a narrow range, compressing right now. And if you look at this range, it's about an 8 or 10 day range as well. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 if you want to go all the way back to this bar. But that's a super narrow compression. If we go here to 9, bring that up. Again, this range right here has enough juice to push this thing 150 to 180 points. If it is to the upside here, that's right in line with a continuation to the edge. Now we know that 1960 has been the big level here, so if you form this box above 1960 and fail, you're going to rotate back to 1800 to 1830. So right now, watching to see which way we move out of this range. At the moment, things are pointing to the upside with a shot to go find the edge at 2078.80. Lastly, taking a look here at the YM. This one's up about 0.5% and is through the 33K level. That's important here. That's this pivot high right there. That's the pivot high that we mentioned could be important down the road. If price can forcibly push through that pivot high, you start to open up the top end of this range as high as 34,500. So is the market going to be able to make that transition? Or by the end of the day, do we leave behind a tail and a failure? Again, this market is just above the previous week's high, so keep an eye on that previous week's high. A failure to maintain acceptance above that previous week's high would suggest a rotation back within the range, which could fall back to the FOMC key level below and perhaps even a bit lower. So keeping an eye right now on that previous week's high, which is 32,994. Call it 33K even. That's going to be the level to watch here. Do we finish above that level today or below it? All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.